Across all my portfolios combined as it sits as of current, I own around 612 shares of the Schwab US Dividend Equity ETF SCHD. Now my average cost around all the brokerages is around $73 or so that means that I've invested around $45,000 into this ETF that I definitely consider a buy and hold forever position in my long-term portfolio. Now in this video, we're going to dig deep into SCHD and I'm going to explain to you guys why I not only have spent $45,000 so far on SCHD over the last few years, but why I intend to spend another $30,000 or $40,000 into more of it from here. So whether you hold on to any of SCHD or maybe are just interested in it, make sure to stick around until the end, drop a like down below, and let's get right into it. Real quick for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now for starters, the main reason on why I hold so much of this ETF and intend on holding it long term and forever is because this ETF honestly matches every single thing I'm looking for as far as a long-term dividend growth investment. And honestly, I would argue that this ETF offers pretty much every single thing any long-term dividend growth investor is honestly looking for. Now, first off, the fund's objective, in case you guys aren't familiar, is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Now, we broke down the Dow Jones US Dividend 100 Index before in other videos, so definitely check those out. But the main reason I like this index so much is because of the methodology and the fact that it's very hard for different dividend-paying stocks to even enter into the index in the first place. And this is because a batch of rigorous screenings, it sort of weeds out all the bad stocks and sort of keeps in all the good ones. At least that's the idea there. Now, I said SCHD is basically the perfect long-term dividend growth investment for almost any dividend growth investor out there, so let me continue on why I think that's the case. Now, first off, I touched on the fact that I am very fond of the underlying index and I like how it works. On top of that, SCHD is super cheap to hold on to, so if you're looking to buy into ETFs across the market, expense ratio is going to matter, especially as you gather tens of hundreds or maybe thousands of shares long term. SCHD's expense ratio is 0.06%, very fair if you ask me. On top of that, as a long-term investor, I do want to hold on to different assets, in this case an ETF that's going to increase in price over time. And although we don't know what's going to happen in the future, over time, SCHD, other than a few small bouts, has increased in ETF price consistently. But also just as important, especially for myself, because I would consider myself a dividend growth investor that is more focused on income than maybe some others. And this is because as a 31-year-old dividend growth investor that currently owns a portfolio that generates around $6,500 more or less per month, I am getting relatively close to the point to where I do want to start using some of my dividends to maybe pay for bills, more vacations, etc. So although some investors out there, maybe some of you guys are even watching this video, would not really care all that much about dividend income, to me specifically, it's important, which is once again one of the main reasons on why I love SCHD so much. So now that it's obvious that dividends are important to me, maybe even more important than to the next guy, SCHD does offer a pretty large starting dividend yield of around 3.5 more or less %. Now, because I was lucky to buy a ton of SCHD back when it was around $72, $73 per share, my yield on cost is closer to 4%. But even still, an ETF that offers everything that this ETF offers with a starting yield around 3 or 4% is very decent if you ask me. But it's not just the fact that SCHD tracks an index with a high quality methodology, or the fact that SCHD's price has moved up pretty consistently over time, or even the fact that SCHD offers a relatively larger dividend compared to other ETFs in this class. But also right here, you see what I'm looking at. Dividend growth is very, very important to me as a long-term dividend investor. Now, dividend growth is basically how much a dividend is going to increase year over year. So as you can see, basically every single year, and I'm going to show you another view here in a second, SCHD's dividends have been getting bigger and bigger over time. Now, if we go all the way back to 2014, you can see SCHD was paying 27 cents on a quarterly basis, and the dividends every single quarter, more or less, with a few exceptions, literally just a few, every single quarter, SCHD investors have been receiving larger and larger dividends over time. Another example, last year in December, SCHD holders got paid 75 cents more or less per share that they owned, and if you go all the way back to December 2014, investors were paid roughly 3 times less. So the idea is that even though we don't know for sure if this ETF is going to continue to pay more and more in dividends over time, I'm taking the bet that it has a high likelihood to. And this means that because on average, SCHD's paid around 10% more in dividends year after year after year, I'm hoping that at least over the next 10 years, even if SCHD paid half as much more in dividends every single year, that would make my dividend income substantially increase from where it's at right now. But another good metric to keep in mind is total return, and looking at SCHD's total return over the years. Over the last 12.5 years or so, SCHD has returned, on average annually around 13%, which is incredible and outpacing most other stocks or ETFs across the markets. Not to mention a $10,000 investment into SCHD back in 2011 would have now been worth $45,000 plus just around 12.5 years later. And not to make it all about me, but for me specifically, with my $45,000 position of SCHD that I currently have as of right now, even using a lower initial annual dividend yield, because like I said, my yield on cost is even higher. If we typed in everything that I currently have with SCHD, and if we make it so that I don't buy another single share ever again, which of course is not going to be the case, I want to keep buying SCHD for a while now. This means that over the next 30 years, by the time I'm 61 years old potentially, my $45,000 position of SCHD could be worth potentially more than $1 million and be earning me north of $200,000 per year in dividends. Now I know what you're saying, well, we don't know exactly what's going to happen with the dividend for SCHD in the future. It could get smaller, it could stay the same, etc., etc. I know. But just going off of historical numbers, it definitely shows the potential for some massive increases down the road. So why exactly did I decide to put $45,000 into the Schwab US Dividend Equity ETF over the last few years? It's because of all the reasons we talked about in this video. The fact that I'm a huge fan of the underlying index, the fact that SCHD's price return has been substantial, making there a good argument that my net worth will also increase over time as long as SCHD can continue to trade how it has. But on top of that, because of the initial cash flow that this ETF is offering my portfolio, and along with that, the dividend growth potential long term, this ETF is not only becoming a foundational position in my long-term portfolio, but on top of that, I would not be surprised within the next few years if SCHD is one of the largest positions across my entire portfolio altogether. Now, of course, because SCHD ETF does track the Dow Jones US Dividend 100 Index, I think it's important to take a look into the methodology and see exactly how this works, how stocks are added or maybe not added. And to be honest, for anyone holding on to SCHD, I think it's very important to know some of these facts if you are going to hold on to this ETF long term. So the methodology says Dow Jones US Dividend 100 Index Universe. The index universe is defined as the constituents of the Dow Jones US Broad Stock Market Index, excluding REITs. So even though REITs are great, I'm a huge fan of REITs, they are not going to be included into this index. It then says stocks must pass the following screens: minimum 10 consecutive years of dividend payments, minimum FMC of US 500 million, minimum 3-month ADVT of $2 million US. Now before I go, I will say as a caveat, I'm not saying that SCHD is the only dividend growth ETF to buy across the entire market. I know there's different other high quality dividend growth style ETFs just like SCHD that can basically get us all to the same place differently. But what I will say is that dividend growth investors looking to invest into a high quality dividend growth ETF that offers a little bit more cash flow from day one, SCHD is pretty hard to beat. So now that you guys know exactly why I spent $45,000 on the Schwab US Dividend Equity ETF, I now want to hear from you guys down below. If you currently own any shares of SCHD across your portfolios, how many shares do you have as of right now? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.